Well, I am excited to welcome into the show Mr. Fred Moskowitz. How are we doing today?
Doing fabulous. Thank you for having me on today.
Awesome. Well, I know that, as you know, we explore all different types of vehicles and instruments and modalities for building and creating wealth, unlocking a great lifestyle. And you've got one that is very, very interesting and niche and profitable. So I'm excited to get to dig in with you today. For those that don't know what note investing is for our listeners, talk a little bit about what it is and how this has become a vehicle that you have leveraged for so many years to build and create your own wealth.
Yeah, absolutely. Note investing is investing in debt. That's what it is. You're investing in notes and mortgages on properties. And so this is secured debt. Your investment is backed by collateral that has tangible value. Now, let's face it, Matt, a lot of people know about investing in real estate, right?
Yep.
It's very popular and has so many benefits. And people invest in single family houses and commercial property, maybe multifamily property or short-term rentals. It's really popular now, right?
Yep.
And so if you think about it, most of those properties are all purchased with some kind of financing, right? And so what if we talk about the idea about investing in the paper, which is investing in all those notes and mortgages associated with those properties? Now, I've been around real estate for a very long time, and I feel that note investing, it's a niche area, but it's a very interesting part of the real estate business. And what I found, Matt, is that there's a lot of real estate investors, they don't pay any attention to this at all. Many people, when they think of a note and a mortgage, they think about it from the perspective of being the borrower and not as being the lender.
Mm-hmm.
What note investing does is it allows you to step across the aisle and become the bank. And when you do that, you get to transition from being the one making the monthly payments to being the one receiving the monthly payments. And what this does is it really gives you a lot of stability and predictability on your cash flow, which I love.
Yes, you and I both, brother. Absolutely. Now, maybe we could talk a little bit about some of the key benefits you see and others experience when investing in mortgage notes compared to other investment options that are out there and available in the market that traditionally most people gravitate towards.
Yeah, absolutely. Well, think about this. One of the big benefits is that think about the perspective from the perspective of a lender, right? A lender is on title for the property, and their investment is protected by the collateral. They have a ownership position in the property, ownership interest, I should say, and they're not responsible for maintaining the property. The property owner is. So the property owner gets to deal with the maintenance and upkeep of the property. If it's rented out, they manage that. If the heater goes in the middle of the winter, it's the property owner that takes care of replacing that. They're not going to call the lender up and tell them, hey, the heater broke and it's in the middle of February and we have an issue here, right? And so there's a common saying in the note investing industry that when you do note investing, you don't have to deal with the 3 T's: tenants, toilets, and trash, right? Because let's face it, life is too short. Banks and lenders figured out many, many years ago, centuries ago, that they rather be in the business of being a lien holder on title instead of being landowner on title. And this is why. And so being a note investor, it becomes very easy to scale up a portfolio, very large, many, many, many notes. and you're basically limited by the capital that you have and how much of a portfolio you're comfortable managing. And so it's different than real estate in that regard.
Yep.
Um, and it has a lot of benefits. I like both. I like owning real estate is powerful asset class, but so is the asset class of notes, of mortgage notes. And
Now,
there are pluses and minuses to either one.
and maybe you could talk about some of those potential risks or maybe the challenges associated with investing in mortgage notes and how you or your investors mitigate and, address some of those.
Yeah, absolutely, absolutely. So there are definitely some pitfalls. A lot of it revolves around knowing how to do proper due diligence, evaluating a note, knowing which ones to stay away from for different reasons. There's also some compliance risk where this is an industry with a lot of compliance and oversight. It varies from state to state, and so as an investor, it's important to keep a on top of that, of the compliance landscape, and understand in each state where you're investing in what's required. Some states require licensing, some states require using a licensed loan servicer to manage the notes, which, by the way, I recommend doing it 100%, whether it's required or not. It just simplifies your business life so much. And other pitfalls are that you have to understand there's always threats to a lien, and it's important to know what they are and how to manage them. For instance, and a lot of this will sound familiar to you. Taxes have to be paid on the property at all times. Otherwise, the county can put it up for tax sale and wipe out all the liens on the property. This is why lenders require that taxes get paid out of escrow, because they're going to make sure that taxes get paid. And if the taxes aren't paid, the lender has the right to go in and reinstate those taxes and then add them onto the loan balance. And so for anyone that is a borrower on a mortgage and note, now you understand why banks want escrow. They want to make sure insurance is kept up, the taxes are kept up. If there's a HOA, homeowners association, those also are paid and kept up. This is why. And so there's definitely some different threats to the lien, and it's all about managing the risk and understanding what's involved and how to do that. You set up your systems and processes properly, and then you're well covered.
You mentioned staying away from certain notes or properties.
Yeah.
What comes to mind when you say that?
There are, like any other investment, there's varying levels of risk, right? You can get into a super safe note that has a great track record, and in exchange for that safety and security, you're going to get a lower rate of return. Now, on the other hand, if you're more experienced, willing to take on more challenges and problems, you can get involved in notes that have a higher risk and make more of a return that way. But it takes experience, it takes knowledge and skills and the wherewithal to handle those problems. And so I always give the analogy. It's like if you're rehabbing a property as a real estate investor, your first rehab, it might be very simple cosmetic stuff. And then after you have a few deals under your belt, then maybe you'll tackle something a little more involved. A little more involved with structural work or systems work on the property. You have better relationships in place and contractors and financing and all of the tools that you need as an investor. Well, it's the same thing goes in note investing, right? You can invest in pristine property with a loan that has a beautiful track record, or you can invest in a higher risk loan. Maybe the track record is not clean. Maybe the equity position is not strong on the property, or um, the loan is a hard money loan where it's made to an investor at a very high rate of return, and it's a short-term note, and you just have to know how to manage those types of assets. And for some investors, what can be appealing is investing in a mortgage note fund, which is going to be more of a passive investment. You're turning your capital over to fund managers, and they're going to manage the portfolio. They have relationships in place already to find and buy notes. They're buying notes in bulk quantity so they can negotiate a better discount. And then they're paying the returns back to the investors. And this becomes more passive. So for someone maybe that's investing out of a retirement account using IRA funds or qualified account funds, a mortgage note fund is a great way to go because it is more hands off. And the fund managers, they're having the skills and expertise to handle all of those different risks and pitfalls. And they're well positioned in the marketplace for finding and buying notes.
For an alternative investment fund like this, what are some of the common return thresholds or expectations a passive investor might expect if they were to invest in a fund like that, if they actively didn't want to pursue and manage being the note holder themselves?
Well, I'll tell you what, I've seen a lot of different funds out there in the marketplace. It comes down to what's your risk tolerance, your time horizon and risk tolerance. What are you comfortable with? For someone that has a lower risk tolerance, maybe they want to invest in a fund that focuses on only income and super safe notes. Maybe you're looking at 5 or 6% rate of return on something like that. Now, if you're willing to take on more risk, there's no end to the diversity of what you can find out there. But these can get up into 8, 9, 10, 12%, right? You invest in a hard money loan fund, easily that's in the double digit percentage range. And that's a very niche product, but the fund operators that are involved in those, they have the great relationships. They lend to real estate investors. They monitor the property renovations that are going on. These are properties that are unoccupied, but it's a short turnaround time. So it's a different business model. And so I like that diversity out there because for every investor, there's a good match for what you're comfortable with. And like anything else over time, your strategy changes, your risk profile changes, and your goals change, right? Your goals and objectives as we get older, we get into a different place in life. Maybe an older investor is going to be starts to become more concerned with preservation of capital as opposed to growth of capital, right? And so it's a different approach, a different investment thesis at that point.
Now, obviously, not knowing what everybody's risk tolerance and income goals are, or wealth preservation goals are, maybe speaking specifically to you, what are some of your favorite types of notes or loan structures that you would consider some of your bread and butter, I guess, investments on that front that others might be able to, wrap their heads around as a potential for them in this space?
Yeah, great question. So for me, what I like is I like residential mortgage notes, right? Because if you think about it, there's mortgage notes on residential, your Fannie Freddie 1 to 4 unit category. But then you can get into non-owner occupied, you can get into commercial notes, right? There's all of these different categories. Hard money loans, which are business purpose loans and written that way. There are many type of commercial notes, secured, unsecured. But what I like myself personally, I like residential. The Fannie Freddie 1 to 4 unit definition is the one that's most available because there's the most of them that exist in the United States, and so they're easier to come by, easier to purchase in bulk, and so I like that. I like loans that are in first position, second position. Some investors are not comfortable with not being in first position in lien priority. There's a lot of different nuances around that.
Right.
And I look for loans that have a good track record. And what's really important for me is who I'm transacting with. Who am I buying the notes from? What kind of a reputation do they have? Which matters a lot in our industry. Relationships really matter. And so we learn to become very keen on tuning into who we're doing business with.
Talk a little bit more about that aspect of it, right? In terms of, who you're doing business with, whether you're making, the loan to somebody and, they're essentially, I always call the lender the jockey and, the borrower the horse, right? They're the ones who are running around the track, doing all the hard work, but you're betting on a horse as a bank or as a lender. Obviously, you're betting on the project, you're betting on their due diligence, their plan, the vision for bringing that to life and making sure that you're going to be whole as the lender. How do you go about doing that due diligence and auditing and vetting relationships, whether it's who you're transacting with on the borrowing side or who you're buying notes from? What does that process look like for you in terms of how you look at relationships in your business?
This is a huge area. In the note investment industry, it's a small world.
Mm.
We all know each other. We go to conferences and events, and it's like a big reunion. We all know each other, and so if there is a bad actor out there, word travels fast.
Yeah.
When we're buying loans, we know who generally. You can see the entire chain of ownership of a loan back all the way back to when it was originated. And so you see different entities and you know who's involved and so on. But if there's someone you don't know, it's so easy to call up. You call up someone, you call up attorneys, you call up other note investors and say, hey, have you ever heard of so-and-so? I'm looking at a transaction and would love to get your feedback. And people will tell you, right? All it takes is making a couple of phone calls, and they'll say, yes, I've done business with them before. Everything was great. They did everything they were going to do. We did hit some problems, but they resolved them quickly. And overall, it was really smooth transaction. And I look forward to doing business with them again. So when you hear an informal feedback like that, that's great. That's really good. And then other times you'll get a very different answer. Maybe it was from an attorney that maybe there's an attorney that has done some kind of business with them, and they're not going to share with you more than they're allowed to, of course, but they'll give you a general feel for what the experience was like. Same with vendors. Any of the vendors that we use, everyone knows each other. And so this is very common practice. So it's important to do due diligence informally, like I just described, by picking up the phone, making some phone calls. Also utilize the internet, all the tools that we have. You can do Google searches on individuals, on the entities they're associated with. You can run skip tracing using various databases and data analysis products. So we have access to a lot of tools and techniques, and it's something that gets overlooked a lot. And I would even extend this. This is not important just in note investing. It really goes for any business transaction you do, right? If you were going to let's say you were going to enter into a partnership with someone, or a large business transaction, wouldn't it be a good idea to spend 10 minutes or 15 minutes even looking up on Google the entity, all the principles of that entity, get into the court dockets and look up the names and see, hey, has this entity been involved in litigation in the past, right? All that stuff is in the public record and we all have access to that, right? And
Yep.
so all it takes is just putting on your Sherlock Holmes hat for a little bit and doing some detective work. And if you're not good at that, you can find someone else that is, and they'll do the consulting for you.
Yeah. Now, I always have said, being the bank is the top of the totem pole and everybody wants to be at the top. So how does one break into this space? If they are somebody that doesn't have a lot of money or a ton of experience, is it possible to break into this space as a beginner, or do you need to be a little bit more established? What does it look like for getting into the space and actually getting some traction in the space?
Yeah, that's a great question, Matt. A great way to get involved for someone with less experience is participating in a note fund, right? That's a great way because you can get involved and you're basically partnering up with the fund operators and you're becoming part of something larger than yourself. Other ways are to, if you want to really get involved actively and be buying your own notes, you got to build relationships with other people in the industry, get some education. There's plenty of books and podcasts and different resources available. Also, attend events and workshops. There are many of them around the country. Find one that matches up well for you and go sit in a workshop for a couple of days where you're really going to learn. And probably the first time you do it, it's going to feel like you're drinking out of a fire hose, overwhelming, right? Some of these educators that teach, they're brilliant, and you can really learn a lot. But it's a lot to digest, and it can be overwhelming. But there's definitely lots of great ways to get started.
Now, you talked about books, conferences, events. What are some of the ones that you would say have helped you or that you think are valuable for anybody looking to, accelerate their learning and traction in the space?
Yeah, absolutely. Well, for books, one that I really love is called Invest in Debt, written by Jimmy Napier. That's probably one of the first books that came out on this topic. Um, as far as conferences, there are many. There is Paper Source is one that I really like a lot. There's also DME and a few others that take place, and so it is really beneficial to travel and attend conferences. So the education you get there is super valuable and impactful. But also think about this, Matt, when you go to an investment conference, an investment event, people come from all over the country. And so who else is there? A couple of hundred investors at all levels of experience and expertise that you get to meet, network, build relationships with. You'll meet sellers of notes, you'll meet vendors that will help you get your business up and running. And so it's powerful. I always say it's great to leverage digital technologies to learn from home different things, but nothing beats going out in person.
Right.
And getting into that environment, into that energy. It can be really impactful.
I couldn't agree more. Relationships, especially in this world, are going to trump anything that you are going to read in a book or hear on a podcast. Getting in person, that can make all the difference between getting a deal or getting a loan, an opportunity across the finish line. You talked about, the industry as a whole. And I'm curious over the course of the last few years, especially with what's been going on with the Fed and capital markets and, notes as a whole, somewhat becoming, if you're a mortgage holder, I'm guessing, you've always been insulated in many ways when it comes to, the changes of the overall landscape. But talk about how the landscape of mortgage note investing has evolved in recent years in light of, all the trends that have transpired over the last 18 to 24 months in capital markets and what's going on with the economy.
Yeah, this is a great question. Note investing, the environment and the industry, it goes through cycles. It's similar to real estate. Um, However, there's some delay to it. In other words, the changes that happen now. Think about this: changes that happen now, whether it's an interest rate or an origination, anything like that. Loans originated today, they're going to get originated and then start to get sold and resold. And then investors may buy those years later, right? I often see notes, we buy notes that were originated 3, 5, 10 years ago or more, even. And so when you buy a note, you are having a contract assigned to you. And so you are buying the note with all the terms and conditions that were in place in that document at the time it was originated. And so the change happens for sure, but it's like you have a long runway ahead of you to see how it's impacted and see what adjustments you need to make in your business. So that's really nice. And another thing that's interesting is, if we think about this, the average lifespan of a mortgage note in the United States, it's 5 to 7 years. So within that time, the property gets sold or someone refinances and you get cashed out. You get the note paid off. And so now you start all over again. You get your capital back. Hopefully you made a profit because you did a good job. And now you have your capital. You go and buy out and buy a new note. And so it's constantly recycling your money. The velocity of money is a big part of the note investing business. You want to keep your capital invested as much as possible at all times. Otherwise, if you have cash sitting idle, it's going to create a drag on your portfolio. So those are some important considerations to keep in mind. And yeah, the landscape, it's always changing. When I got started in this business back in 2010, I look back and I think about, wow, it was really a lot like the Wild West back then. So much has changed and evolved over the years, and there's more regulation now than there was, and there's better practices and controls now. Um, Loan servicing has really tightened up, and there are more loan servicers in the market than there were years ago, which is good. So you have some diversity in your vendors as well. So a lot of changes, but let's face it, that's part of life, isn't it?
Yeah.
There's always change.
Yep.
That's the one thing you can count on. There's always going to be change, and you can't control that. But when you can control is how you observe what you do, how you respond. And so the idea for us as investors is to get a look ahead at what's happening, what's coming down the runway, and then see how you're going to adapt and adjust your business to be well positioned for what's coming in the future.
Yeah, makes sense. Now, I always love to, give people real tangible, success stories, right? Or maybe, horror stories.
Mhm.
Uh, Maybe you could talk a little bit to the win-loss percentage of maybe the average lender, the average note, investor. And I know obviously it varies, per
It
person, per
does.
shop, per deal.
Yeah.
But that being said, maybe like an overarching idea of what, if you do the right things, with the right vendors and the right people, the probability of success versus, loss, and
Hmm.
maybe share, one of your best or your most exciting, achievements as a note investor and the returns that were attached to that.
Yeah, absolutely. So, what comes to mind, I can share a story about an investor that I was working with and helping her quite a bit. Uh, she was an all long time landlord in Philadelphia, had lots of properties. She was getting up there in age in her 60s, and um, she had one of her properties go vacant, and she found that it got trashed by the tenants, and she was going to have to renovate the property again. And she said, "This was my third renovation, major renovation of this property throughout my ownership." I think she owned it for 20 or 30 years. Let's say she owned it long enough that all the depreciation schedule ran out on it. If if that resonates with you,
Yep.
right? Um, and she had a couple of properties that were kind of like this. So she was really interested in mortgage notes. So she ended up renovating the property again one last time, but then she didn't put it back out to rent. She sold it. So she sold the property, paid her taxes, um, and did this with a few different properties. She took all that capital and invested it. She invested some into a note fund, and then she invested some into individual notes. And she said, "Oh, my returns are so much higher now," because she was now getting a return on all of her capital instead of when she owned the rental properties. She was just making a much lower return on her equity if you were to
Yeah.
calculate it that way.
Yep.
And so she was so happy. She said, "This is great. Now I don't have any of these headaches. However, I'm getting the cash flow that I always got and more, doing much better with that." And for her, for the place in life where she was, that was much better, much better. So that's one success story that someone that I have a relationship with personally that I know I've known for years. But some other ideas, so you asked for some ideas. So with mortgage note investing, I like the idea of diversification. So take all your capital that you were going to invest. Let's say you had $1 million to invest. Well, you could go and invest in one single note, a jumbo loan, right? Let's
Yep.
say it's a pristine property worth a lot. You're going to have all your money tied up in one deal. And yes, it's safe and everything, but it's one deal. Well, I really like the idea of, instead of investing in one note, take your capital, invest into 10 or 20 smaller notes. Now you have diversification. You're spread out geographically, maybe across different states. It's just like the way an insurance company manages their risk by insuring a whole pool of insureds. They write all these policies and spread out all their risk. Well, we do the same thing in our note portfolios. And so think about that approach, right? Insurance companies have been around for hundreds of years. They know how to make money. Look at their business model and say, "Hey, is there a lesson that I can apply in my own investing?" And so that's it. I always like to talk about that diversification because it really works. And so, yeah, you might have an issue here or there, but it's not your whole portfolio going down at once. They're isolated problems, and you can handle those. You can take the steps necessary to resolve anything that comes up and manage that actively. And then you're in a good position. You're strong. Your portfolio is generating cash flow in a stable manner.
Now, I always love to know how there's so many different wealth building vehicles out there, right? I would love to hear how note investing has changed your life and what you are, focused on going forward as you continue to build your portfolio and your business with this particular vehicle?
Yeah, a great question. One way it's really changed for me is it's offering me the opportunity to make an impact to others through education, through my book, through my classes and teaching that I do. And so I can share the message and share knowledge with others. And so I really love being able to make an impact that way. There's nothing more rewarding to me than to have a investor um, become interested, seek guidance. They take action and put into practice the skills they're using, and then they start to generate income and cash flow and benefits. And so you start to impact other lives, which I love. I love being able to do that because you know what? When I was starting out, more experienced investors did that for me. And a lesson I learned early on was this: to um, learn the skills, put them into practice, make a lot of money, do well with it, and then once that happens and you have experience, then turn around and teach someone else. And I love that. It's a great way of paying it forward and sharing skills and knowledge with other people that take a sincere interest in learning. It's so rewarding.
Well, I know you've been doing this since 2010 and have, built a great business. You've got a great book. You've got lots of great education. I know more people who are interested in this may want to reach out and connect with you to learn more. Where's the best place for them to do that, Fred?
Yeah, thank you. The best place to connect with me is by visiting my website, which is fredmoskowitz.com. And I know that maybe a lot of you might prefer an easier spelling. So as an alternative, you can visit giftfromfred.com and they'll take you right to my website. You can connect with me there. And for anyone that would like to request a special report that I've put together on note investing, I'm happy to send that out. You can request it right on the website. And if you'd like to learn more about my book, it's called The Little Green Book of Note Investing. It's available on Amazon. You can check that out there. And I'll say I always love connecting with investors, building relationships, and it's a big part of what we do. So I always love that, and I'm welcome for anyone to reach out.
Well, we'll be sure to link up all of those resources at millionairemindcast.com on Fred's episode. Fred, thank you so much for coming on today.
Thank you, Matt.